What's going on, guys? It's T from OQP back with another breakdown video. And the thing is, some of you guys might have noticed recently that we've been catching a lot of trades on gold with super precise entries. So, what I'm making this breakdown video for is essentially just showing you the thought process that I've been going through in taking these trades because they've been super precise. And for you guys that are on our page, you can see on our stories that we're constantly posting this. So, it's all there, right? So I'm gonna break down everything that I would go through in regards to me walking through a trade. So these trades that you're seeing in front of your face right now already taken, but I'm just gonna walk through back again and just show you guys what I was doing. So first thing is first, always when I come into these markets, right? I'm not looking to buy when I can clearly see that there's a downtrend, right? You guys can see that we're going down, and I know there's a lot of lines, but you guys know that price is going down, right? So me being using logic, I'm just gonna continue to try to sell. So that's the first thing that I'm doing when I'm coming in here. The second thing that I'm doing specifically when I'm trading gold, bear in mind when I'm trading other pairs, I use different methods because different pairs move differently, right? So with gold, I'm pretty much in tune with how this pair moves. So I understand what it's doing, I would say 90% of the time, 80 to 90. Let me not be too generous with that, but you get the picture, right? So what I'm doing when I'm coming into it, because I know that gold is extremely responsive to order blocks, right? That occur before price, such as in this situation here. Hold on a second. You guys can see this order block right here, this green candle right here. And following that candle, there's a massive push to the downside where price just absolutely goes down, right? Sorry, guys. Well, you can see it just completely just pulls down like this. So once I notice a situation like this is a smart money concept that we do teach at OQP, by the way. However, when I do notice this, 90% of the time, what tends to occur is that price will do this. So there'll be an order block, price will push down, break structure to the left, and then it will come back to that specific area, right? And then continue to sell off depending on if maybe we broke structure or another confluence. But the one I use for the majority of the time is this breaks of structure. So I can even put this here so it illustrates to you guys what I'm talking about. So this right here, let me just put the template. BOS is break of structure. Super simple, right? So the thing is, when I had this marked up, price was like about here. Price was relatively here. So all this information here is what I would have been seeing, and this is what would have then occurred after I had identified my order block, price pushing down my break of structure, and then anticipating price to retrace back to this point. But the thing is, in the meantime, while that was happening, I was also catching other trades, right? And I was stacking trades on top of trades. So the first trade that I actually took happened roughly around in this area. So I'm going to do a bar replay so we can have a look to see what I would have looked at as this was occurring. So on the 30-minute, same situation had happened again, right? So you might ask yourself, why did I decide to sell off here, right? When I'm anticipating price to come all the way back up here. Because it would be foolish me anticipating price to come up here and then place a sell here when it's so close to coming here for this sell. Do you guys get what I'm saying? Right? So why did I decide to come in and sell here? So here was my thought process behind this. Again, once you have a good understanding of a pair, you can recognize certain things it's going to do before it does it just because of prior experience, right? So in this situation, again, I see an order block. Perhaps let me come in on a 15-minute time frame. Thing is, you can't really see it as well as opposed to the 30 here. So again, the same principle. I looked and I seen an order block, and guess what followed it? Look at this big push in momentum, breaking structure right here. So the breaks of structure would have been here for me. So when you zoom in, you'll be able to get a better understanding of the break of structure because on this higher time frame, you might deem this as the break of structure here, right? Here, because you can clearly see it's going um, higher high, high low, higher high, high low, higher high. So it coming down here, you might not deem it as a break of structure because it's not broke this point. However, when you zoom in to perhaps a 5 minute time frame, you can kind of see that we pretty much have broke structure because we're making high highs, high high, high low, high high, high low. This is a high low, high high, and look, we broke it right here. So we broke all these high lows. So identify that. And again, like I mentioned, when you notice the order block followed by a big amount of momentum, right? Look at this momentum leaving imbalance behind. So I had identified that, right? So this is what it was looking like for me before placing these trades, and I would have my entry in place right here on the 30 minutes. So let's just fast forward that. Look at this. So it took me in, and for me, I usually just do 3 to 1. So for instance, if I'm putting 100 pounds on the line, if it goes in my direction because it's 3 to 1, that's 300 back. Do you understand? So this was exactly the trade I took. Bow. Right, just like that. Another confluence that I actually had on my side, which I just remembered right now, was the fact that I had drawn a trend line right here, and this trend line was perfect. This trend line was perfect, guys. See, this is a confluence that you can use as a two-in-one. If you see that price has broken a trend, you can see a ton of momentum pushing off the previous order block. This is almost like this is the dead eye spot, you know. This is where the money's at. And look, it's pretty much a perfect trade, right? It's a perfect trade. All right. So another thing that I was doing with this trade was I mentioned earlier I was stacking the trade, right? And I remember exactly where I entered in, and it's right here, right? So you might ask yourself, why did I enter here? What was so special about this position that I had here? And the thing is, guys, these are all on our stories, so you can literally just have a look at the price that I would have, like the price will be here when I put it on the story, so you can just have a look for yourselves if you're really in doubt or whatever. It's there. Do you know what I mean? So why did I decide to? Okay, how did I know that price would most likely retrace to this specific point? Same premise again. When you notice price moving so aggressively, or when I notice price move so aggressively, the order block before the aggressive move, price tends to come back to that point and then continue pushing. And you can clearly see that. Let me take off this green. Hold on. You can clearly see that. Look, guys. This order block right here, this green order block, I hope you can see this. This is on the 1 minute, by the way, bear in mind. So this order block, you can see there's a ton of momentum that continued pushing price to the downside. However, what I usually prefer in a situation such as this is I usually like for my pushes, such as this one, to break structure to the left. But you can see in this situation, it didn't really break any structure before this massive momentum push. However, when you understand your pairs and you spend time on the same pair every day, every single day, you're going to have what I would refer to as trader's intuition, where you can just kind of tell that this is most likely going to happen based upon previous experience. And that's exactly what happened. So let me come back all the way here so I can get my things back up here. So I added a trade there and it went perfectly in my direction. And I got a beautiful, beautiful start to the week. It was glorious, guys. I was so happy. So that was the first trade that we actually ended up taking at OQP. And the thing is, what to do when there are no trade setups available is don't trade. It's that simple, guys. I know it's hard. I know we all want to make money, but you have to be disciplined and not trade when there aren't any setups. So after this, I didn't get greedy and then try jump back into the markets. I waited. And what was I waiting for? I was waiting for this entry right here. This beautiful entry right here. That again, same premise. I'm going to keep going over it again so you get it in your head. So this order block before this massive momentum push, and like I mentioned, I do prefer the ones where we do break structure as we have done here, and then we retrace. So same premise again, literally just that. It's not literally just that, guys. What I meant to say was you still need to understand market structure. So you could see this in an uptrend, right? You see this in an uptrend, and if you decide to sell in that uptrend, you might get burned, right? So I already understood the price was heading to the downside. This was a confirmation for me right here, this break of structure that we're very much most likely to keep pushing to the downside. So let me play this for you lot so you guys can see. So I was just waiting, letting price do his thing, you know, and then just patiently waiting. And then look at this, guys. This is why it's actually pretty important that you put your stops at a relatively decent level, because you can see price came up quite a lot and pretty close to our stop loss here. I think my stop loss was actually a bit further up, if I'm being honest. But again, it just goes to show that you should always put your stop loss a fair bit above. However, I was fortunate enough to not get taken out because I put my stops at a pretty decent level, and then price just started melting. It started melting, guys. And my target was here, this line here, right? And the thing is, with this trade, it's still running right now. It's running. It's running. This is the target. So I took out a big chunk of partial profits here, and whatever price decides to do here, I don't really care, to be honest. I've taken out the majority of my money, and I'm happy. I'm looking, however, should I say, to see what price wants to do around this area, because this area is intriguing to me and how I look at the markets. So I'm looking to see what price wants to do when it does come up here. And the thing is, if it does come up here to this line before coming to this one, I'll be interested in taking a sell to continue pushing it down here, right? So that's that right there, right? That is that right there. So this was a breakdown with quite a lot of source. Like, there was a lot of source, and I know for you guys that understand trading, um, you got something out of this video, and those are my intentions when I do make these breakdown videos. I'm motivated to show you guys that you can actually be really successful in these markets. It's not a joke. If you put in the time, you're gonna get the results, you know. First you learn, and then you take off that L, and then you just earn. I know it sounds cringy, but hey, it is what it is. But anyway, I hope you guys enjoyed that breakdown video. I'm gonna try and make a lot more breakdown videos for you guys, give you more information. However, don't forget to follow the page, you know. Come over to OQP, sign up if you want to learn. And besides that, I'll catch you guys in the next one. All right, peace out.